Welcome back, Mindsetters. We're focusing obviously on adjustments, year-end adjustments. We just completed that, and we're looking at common errors that students make for paper 1. Thank you once again to our sponsors, Liberty. Guys, a reminder, please download the Tenfold Education app. Definitely going to assist you with your revision, and do remember to look for the YouTube videos at Mindset Learn, because that's another resource that you guys can use for preparing for your exams. Right, so let's now continue. We're focusing on cash flow statements as well as some common errors that our students make when attempting this question in the exams. Okay, so the very first error that I want to point out or highlight to students that are watching this lesson at the moment is the mixing of financial years. Right, now what do I mean by mixing financial years? Okay, so this is what we notice. So obviously in your information booklet, when you are doing a question on cash flow statements, you're generally given the current financial year as well as the previous financial year. You know what I'm talking about. Okay, so especially when it comes to your statement of financial position, your balance sheet, because you are comparing, you've got to have 2023, the current year, as well as the previous year, 2022. Sometimes in your information booklet, they also give you the current financial year for the statement of comprehensive income, the income statement, as well as the previous financial year. Okay, made a mistake there, there we go. Right, and as accounting students, we know that when we're looking at information from the income statement, we actually only need the current year. But remember guys, for the statement of financial position, the balance sheet, you obviously need both years. Okay, now please remember, when you have the income statement, right, this is your focus, the current year. You don't really need the previous year unless there is a specific question that requires you to look at the previous year. But generally, it's only the current year. Okay. For the statement of financial position, the balance sheet, obviously here we need both years. Right. Now, 2022 is your opening balance. Your previous year is always your opening balance. 2023 is always your closing balance. Okay, now remember, the moment we mix this, when you are now doing calculations, and you're going to see this when I'm completing taxation paid and dividends paid, I'm going to actually go back to this, error that we find students making. We actually see students that muddle the two. Okay, and this becomes very, very costly, because what generally happens is you'll find that sometimes your plus and minus signs will be incorrect, depending on how you're showing your calculations, or your brackets will be incorrect. And as a result, we cannot give you marks. So obviously you will lose marks in terms of the answer will be incorrect, but also when we try and give you part marks, when we look at your calculations, because you've muddled the signs, right, or that had to be plus and that had to be minus, we again cannot give you marks. So what should you do? As you are reading, right, before you attempt the question, you need to highlight. Maybe take 2 different colored highlighters, 2 different colored pens, and highlight what's your opening balance, what's your previous financial year, what is your current financial year. Okay, right, so that's the first bit that I wanted to highlight to you guys. Now let's get to some specifics. Let's now look at some calculations in terms of taxation paid as well as dividends paid. So I'm going straight to an example, and this is, I'm going to use the example to illustrate the errors that students make. So we're going to start off with dividends paid. It does include taxation as well, right? So dividends paid and tax paid or taxation paid, right? So from the information given, I've got an extract from the retained income note. Assume the financial year ends on the 28th of Feb 2023. So that's my retained income note for 2023 given to me. So balance at the beginning of the year, opening balance for retained income, net profit after tax, dividends not given to me, buyback, okay, an amount of 3,000, and then balance at the end of the year, closing balance, an amount of 14,000. They also tell me taxation is calculated at 30% of net profit. Then I've got extracts from the statement of financial position, the balance sheets. I've got trade and other payable, right, 2023, 2022. So again, this is my opening balance, beginning of the year, right? And 2023 is obviously end of the year, my closing balance. That's important. Can you see what I've done here? Right, extract from trade and other receivables, so exactly the same thing, beginning of the year as well as end of the year. Okay. Right, and they want me now to use this information, calculate dividend paid as it would appear on the cash flow statement. Okay, so my calculation for dividend paid, yes, I can use the note, right? So remember, with the note, obviously amount owed at the beginning of the year, right? How much was outstanding at the beginning of the year? What was my dividends, my total dividends for the year, or dividends on ordinary shares, right, for the year? And I need to also show my balance owed to shareholders at the end of the year. Okay, so this is balance at the beginning to shareholders, balance at the end, total dividends on ordinary shares, and that would then enable me to calculate what was physically paid for the year. So dividends paid. Okay, so please remember, guys, right, total dividends for the year, right, this is the expense for the year, and this represents the actual outflow of cash. What was physically paid, how much of money left our bank account for the year. And obviously that's the outflow that you will show in your cash flow statement. Okay, right, so let's start off with balance at the beginning of the year. So if I go to my information, trade and other payable note, shareholders for dividends, beginning of the year, right, amount owed to my shareholders, an amount of 45,000. Okay, so beginning of the year, I am owing my shareholders 45,000. I'm going to use brackets for this, right? That's how much I'm owing my shareholders at the beginning of the year, or you can put a minus sign next to it. Okay, right, then balance at the end of the year. I'm going to fill this in as well. Right? So balance at the end of the year, how much am I owing my shareholders at the end of the year? An amount of 35,000. Okay, so end of the year, I am owing my shareholders 35,000. No brackets, right? This is positive, right? Why is it positive? I haven't paid them. That money is still sitting in my bank account. Okay, so it wasn't an outflow. It didn't leave my bank account. So that amount, can you see that's positive, whereas this is negative. So immediately, if you swap the two, can you see what's going to happen? Okay, so that is why beginning of the year, end of the year, immediately make that, indicate that on your income, why am I thinking income statement? Indicate that on your information booklet. Okay, right, so I've got a mark there and I've got a mark there. Total dividends on ordinary shares, right? What was your dividends for the year? What was the expense? So remember, I will pick this up from my retained income note. Okay, so from this information here, I've got to calculate this amount. Now again, this is where often we see students making a mistake. Now remember, in order to calculate this amount, you are working backwards, okay? That is how you are getting this amount. Right, so you're going to start with balance at the end of the year, right? You're obviously adding back the 3,000, okay? It's negative, minus the 1,200, minus the 10,000, okay? Right, and that will give you your dividends on ordinary shares. Now, often what I like to do, and you don't have to do this, guys, is I often will put this in a T account, right? Just to make sure that I know when to add and when to subtract. Okay, so which T account do I look at? I look at the appropriation account. That's basically my go-to. It's that appropriation account, or it's appropriation together with the retained income ledger account. So balance at the beginning of the year, right, 10,000. My net profit after tax, 120,000. Okay, I just want to put my plus and minus signs here. Then the buyback, right, 3,000. And balance at the end of the year, an amount of 14,000. Okay. Remember, guys, this is simply a calculation, okay? Right, so how do I get my dividends? So that's the unknown amount that I'm trying to work out. So I would take the 10,000, right? I would add the 120,000, and then I would minus, let's just quickly move this so we can see, minus the 3,000, and then also minus the 14,000, and my dividends that were paid, an amount of 113,000. Sorry, not that was paid, the dividends for the year, 113,000. Okay, so this amount, 113,000. Like I said, you can work directly from this note and you can work backwards, okay, to get the 113,000. Right, so 113,000 is my total dividends, 113,000. And remember, because it's an expense, obviously it is an outflow. It's considered to be an outflow of cash, even though we didn't pay the entire expense. Okay, right, I'm now able to calculate my dividends that were paid. So remember, guys, this would carry a few marks. Okay, so make sure you're showing your calculations in brackets. So like I said, you could either do the T account, or you could obviously, as you're using this information, just make sure that your signs are, so that would be plus, that would be plus, obviously that would be minus, that would be minus, or if you show them the other way around, just make sure that you are consistent. Okay. Right, so my dividends paid, let's pull out our calculator, and that should be, so I've got the 113,000 there already. I'm just going to add the 45,000 to that, right? So that's the total amount that should be in brackets, minus 35,000, and the amount that I physically paid, 123,000. Okay. And this is the amount that we take to the cash flow statement. Okay, so what we often find students doing is they often will put this amount. They show this amount in the cash flow statement, and that is incorrect. Okay, obviously you will get some part marks, but you don't want to get part marks, you want to get full marks. Right? So if this amount was out of, let's say, 6 marks in total, and you are only showing this amount as your answer, can you see you're only getting 4 out of 6? So remember, you want to get as many marks as possible. Okay, right, so that's as far as dividends paid is concerned. Let's now move on to the second calculation, which should be taxation paid. Let's just quickly go here. Okay, dividends paid. Oh, I don't think I've got tax paid. Okay, we can just quickly add that on. Right, so I'm just going to quickly extend this page here for a bit. Or let me just quickly erase this, because it'll just help me instead of moving back and forth. Okay, hopefully you guys have taken that down. Right, and let's now turn our attention to taxation paid. Okay, almost done. There we go. Right, so let's assume we now have to calculate tax paid. Let's get a pen quickly. Tax paid. Okay, so here taxation paid slightly different, right? Because obviously, again, you will find you can either show the note or you can show a calculation using a T account, a ledger account. What do I often recommend my students to do? Show the ledger account, because I know by drawing the ledger account, you're not going to really confuse your plus minus, your brackets, what is an outflow, what is an inflow. But sometimes my students, they go, Mrs. Lal, the ledger account doesn't work for us. We want to use the note, and that's fine too. But remember, when you're using the note, you've got to make sure that you are using your brackets or not using brackets, and you're being very careful. Okay, so taxation paid, you're going to start off with amount that is owing at the beginning of the year, so balance at the beginning of the year, as well as amount at the end of the year, right? And in between, what was your income tax that was recorded in the income statement, what was the expense? Okay, right, so very similar to dividends, right? So that would then give us the tax that was paid, physically left our bank account for the year. Once again, remember, this is the expense, and what was paid is the outflow. So there's a difference between the two. Expense, what I should pay for the year, right? But I may have not paid everything. Tax paid, what I actually paid for the year. Big difference, right? I should have paid 100,000, but I only paid 80,000, or I overpaid 120,000, whatever the case may be. Okay, right, so your tax paid amount at the beginning of the year. So let's again go to our income statement. So, our balance sheet notes, not income statement. So beginning of the year, right, SARS income tax, amount owing 15,000. So remember, trade and other payables, credit balance, what you owing to SARS. So at the beginning of the year, I'm owing SARS an amount of 15,000, right? That's what I'm owing. It's a credit balance, and this will be in brackets, or it's a negative amount. Okay. What am I owing at the end of the year? Am I owing SARS at the end of the year? So if you look at the end of the year, there we go. Trade and other receivables, right? So in other words, a debit balance. I ended up overpaying SARS by 12,000. Okay, so what does that mean? Right, I overpaid. They are owing me, which means how will SARS owe us? It's only when we've paid too much. So 12,000 Rand left my bank account because I overpaid SARS by 12,000 Rand. So can you see that is in brackets? Okay, so that's also negative. Income tax expense for the year. So if we look at our expense for the year, it's not given to us, but we are told tax is calculated at 30% of net profit. So net profit after tax, 120,000. Right, times, I want the tax, which is 30%, divided by after tax. Remember, before tax is 100. After tax, 100 minus 30. So after tax is 70%. Right, and that should give me my taxation amount. So 120,000, so 120 times, I want 30% divided by, I have 70%, and the amount of tax, let's just change that, there we go, 51,428. I'm just going to round off to the nearest rand, so 51,428 is my tax expense for the year. 51, let's pull that out again, 51,428. and remember your expense is also in brackets. So as you can see, everything is in brackets, everything is negative, which means I'm adding all three amounts to get my total tax that I've paid, what has left my bank account for this financial year, right? So I'm going to add 15,000, right, and plus 12,000, and the amount that left my bank account, 78,428. 78,428. Okay. Right, I'm afraid that's all we have time for in today's lesson. I think I've highlighted lots of errors. Yes, they're easy calculations, but remember guys, even with the easy calculations, you still end up making some mistakes. So think before you write, read before you rush to use your calculator and complete a calculation, and maximize the time that you are given in the accounting exam. Okay, so from me, Mahesh Lal, it's good luck. I know you're going to ace your accounting paper 1, and yeah, all the best. Chat soon. Take care, guys.